Hello, everybody. This is Paul Hirschenberg with Hirschenberg Financial.
And Brad Hughes with Southwest Wealth Advisory Group.
As always, we must start our meeting with the disclosure statement.
Securities and investment advisory services offered through Woodbury Financial Services, Inc., member FINRA, SIPC, and registered investment advisor. Hirschenberg Financial, Southwest Wealth Advisory Group, LLC, and Woodbury Financial Services are not affiliated.
Awesome. So, in our last call, it was pretty much right before the election, and we obviously thought we kind of talked about what we thought was going to happen. Now that we're through the election, and hopefully a vaccine is on the way out here shortly, what are your thoughts for 2021 as it relates to the economy and the stock market?
So you mentioned economy and stock market. I think those two do have to be separated. As difficult as it be to do, we must try to remember that they are not connected. They do not mirror each other. So many people, it's very easy to think that they go hand in hand. So with that being said, markets are showing a great deal of optimism because of the vaccine news. The process to get the vaccine distributed and administered could be a challenge, but the belief is that 2021 will be a positive year for stocks, hopefully without the volatility that we saw this year. And economy-wise, I think it will continue to have challenges, and a lot of it is going to be dependent upon what stimulus is, when we receive it, if we receive it, and how quickly the vaccine can be distributed. I think those are the main things that will determine that.
So other than, the distribution of the vaccine and some kind of stimulus package, is there anything else out there that kind of scares you in the short term or long term as it relates to the stock market?
Near term, and it's really near, would be the Senate runoff in Georgia. So that's something to keep our eye on. If Democrats were to win both seats, then we would never have a divided government. And it doesn't mean that investing strategies change, but I think we just have to be aware of it. We have to be prepared for it. And if we have to rethink things, then we look at that. It's not something I would expect there to be a pullback if that happens in the short period. But really, ultimately, what drives markets are earnings. And the expectation is that earnings in 2021 are going to be very strong, especially when compared to 2020 earnings.
Any long-term scares?
You mentioned it. It's not so much the vaccine, but it's the logistics behind the distribution and the administering that vaccine. The fact that it has to be stored at such extremely cold temperatures and transported at those temperatures. You also have a collection of people that say they will not take it, which I think could be a challenge. And we have production limitations. It doesn't sound like it when I think Pfizer and others can produce them at 20 million doses a month. But that's just not enough. It's too. It can only be done it's done at a slow process. So it'll be a little bit of a waiting game.
Sure. So I always like to bring up a new topic on every one of our calls, and the topic this call is going to be currency exchanges and how do those weigh into our decisions as to how do we invest money. So as it relates to the U.S. stock market and international stock market. How do exchange rates affect things, and then how do we take advantage of it?
As currencies get weaker and stronger in different countries, it does change how we invest. We're in a period this year where the U.S. dollar has started to weaken, and the expectation is it's going to continue into next year. When that happens, it tends to benefit international things. U.S. companies that export, also known as multinationals, and it tends to benefit gold. So the good news is we have a little gold exposure in a majority of accounts, and the international exposure in most of those accounts is about 10%. The highest I would expect it to see it at any time would be at 15, but that would almost be a situation where we'd have to get in a period where the U.S. was maybe struggling more. Right now, I think that 10% is still the right exposure when we look overseas.
Perfect. And that kind of brings us right into our last question of the day, which is every month we talk about kind of where we're overweight versus where we're underweight as far as the sectors go. How do you see that going forward?
Going forward, it might change a little bit. So this is probably a question as we record it. People think we just record it the same over and over, because for the last 6-9 months, it's been regurgitating the same thing over and over. We're overweight large cap growth. We're overweight investment grade bonds. We're underweight small and mid cap. We're probably underweight those large U.S. dividend paying companies that are in energy and real estate and telecom and industrials, areas like that. I don't see it changing a great deal going into next year, but I think there is a shift, and we may have talked about it last time as well, where we don't be so dependent upon and so overweighted to that large U.S. growth area. We're starting to fold in more and more of those non-growth related areas. It doesn't mean we're taking on direct energy and real estate exposure, but it's looking at other parts of the U.S. economy and that can benefit. There's some areas where they can benefit from both the reopening trade and the stay-at-home trade, and that's what we're trying to find.
So example of those would be like, obviously, like maybe travel-related type companies that have been hurt more by the downturn.
Again, not taking direct exposure in them, but those are the type. And even some of the industrials, you take some of those, they've really struggled this year, and they're probably going to look a lot better come the first half of 2021 and definitely the second half of 2021. But we're still focused, I would say a majority, not completely, but a majority on those technology, healthcare, and consumer discretionary type areas.
Perfect. Well, Brad, thank you very much for joining us today. And we look forward to seeing everybody hopefully in the third quarter of 2021. I think that's what we're shooting for now. And obviously, if any of our clients have any questions, please feel free to reach out to me or Brad. We're more than happy to talk to you and answer any questions you may have. Having said that, thank you all very much for joining and have a great day. And we hope to see you soon.